Welcome to Fear and Greed, business news you can use. Today, the pace of economic growth picks up, dampening hopes of further rate cuts. The boss of the Future Fund is under fire over a $20,000 bill for 2 international trips for his executive assistant, and shoppers get in early to beat the Christmas rush. Plus, 2025 proves the year of contradictions in the property market, and the search for missing Malaysia Airlines Flight MH370 to resume at the end of the month. It is Thursday, the 4th of December 2025. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, the main story this morning, the economy is expanding at a 2.1% clip, with consumers, business and the government driving growth. The bad news is that inflation pressures are rising, taking an interest rate cut off the agenda.
It was probably a good result all in all for the government, for the central bank, for business, for consumers, although anyone wanting a rate cut probably will be a bit disappointed. Didn't do much to help the cause, but overall it showed an economy performing okay. Growth for the quarter was 0.4%, fueled by higher spending by businesses, particularly data centres. Consumer spending was weaker in the September quarter than the June quarter, though it's still okay. Government spending continues to contribute to growth. The trade sector was solid. It actually detracted from growth, but what we're seeing is the appreciation of the Aussie dollar, making it cheaper for us to buy imports. That's not sort of a sign of weakness in the economy in many ways, even if it does detract a little bit. Certainly the Trump tariffs haven't hit the local economy yet. At least they've hit the economy, but they haven't had a negative impact yet. On a per capita basis, growth was flat, suggesting basically rising population is what's driving growth. Productivity picked up by just 0.8%, still pretty weak. The big downside in the data, we knew this from the CPI figures last week, is that inflation is rising. The left field point in it, which some people are starting to realise, the reduction in inventories detracted 0.5 percentage points from the quarterly growth figure. That is a big number. In the June quarter, it was 0. So if you had 0.5 to the 0.4, you'd have a 0.9% growth rate. Oh, you're looking at me quizzing. You would think that if inventories fell,
They would be sold, right?
And you'd be adding to growth. You would
Yes.
think that. But no. When a company sells from its stock, it's actually drawing down on its assets. So it's a negative to GDP growth.
Really? Oh, there you go.
It's always one of those ones which is kind of, it intuitively doesn't make sense. So what you're seeing, I think of it this, if a company has 100 units of something and suddenly demand spikes, so it goes down to 70 units, then it reduces that from 100 to 70, obviously.
Yeah.
And the suppliers haven't had time to keep up with the boost in demand. Like, that's another way of thinking about it.
Okay. But does it matter? So this is high risk stuff, me asking you this. But in terms of, does it matter then kind of who is, say, spending it, for instance, who is buying it? That if this is then households, for instance, that is buying those products and that's putting...
It could be anyone buying it, so it doesn't matter. It is a quirk of the accounts, basically.
Okay.
That the way you think about it is that inventories, when they fall, detract from growth. Whereas intuitively you think, well, no, they're selling more, of course.
All right.
But that's not the case because it's drawing down on the company's assets.
All right. It was only high risk because I was worried that when I ask you things, sometimes I can get a 20-second explanation or a 20-minute explanation. I'm like, please don't let this be one of the 20-minute ones. We do not have time for that today, but that was a good, short, sharp, to the point. There has been a lot of debate about public sector spending, and the fact that it had driven about 70% of GDP growth until 2024. Now, Treasurer Jim Chalmers has been arguing that the private sector is replacing the public sector in terms of growing the economy. Is that true?
There were signs of that yesterday. I wouldn't say it's overwhelming, really important, because the private sector probably will do a much better job on productivity than the public sector, for example. You're more likely to boost supply capacity in your economy when it's the private sector driving it. Maybe more encouraging comments from Reserve Bank Governor Michelle Bullock yesterday ahead of the Bureau of Statistics data release. She said the private sector was beginning to take over from the public sector, so I reckon she'd know if anyone would.
Yeah, you would think so, right? What's the bottom line here? How is the economy performing? What does it mean for interest rates?
So the consensus among economists is that national accounts are a pretty solid set of numbers showing a broadening of economic growth along with inflation pressures. That raises a question of whether the economy is at capacity and therefore whether the Reserve Bank needs to lift interest rates, because if you're not at capacity and you're growing, you can just sort of you can boost those inventories without adding to price pressures, but let's not go down that road. The Reserve Bank's Michelle Bullock, again in Senate estimates yesterday, said it wasn't clear whether the economy was running above capacity. She also said that the whole purpose of the Reserve Bank Board was to bring inflation to the midpoint of its target range of 2 to 3%, and it hasn't done that. It's failed at that. So put all that together in the blender. Used to go in the Mixmaster, nowadays it's a blender. Yep. Reckon the GDP figures / Michelle Bullock's comments yesterday suggest no more rate cuts for the foreseeable future.
Rate hikes?
Well, maybe. Now, one of our listeners, God, it's like the old days.
You just threw yourself right back into newspaper land, didn't you?
I did. One of our listeners pointed out, stop saying that falling interest rates are good.
Yep.
They're not always good. And it is true when a third of the population has a mortgage, well, those thirds want lower interest rates, but a third own their own home and probably investing, so they might like higher interest rates. So we have to cut the value judgments on interest rates. It was a very fair point.
Yep, there are winners and losers in everything, really, aren't there? And now to this next story, Sean. This is quite remarkable. The executive assistant to the boss of the Future Fund racked up $20,000 in bills on 2 business class trips, one of which was to inspect hotel rooms for the Sovereign Wealth Fund's senior management team. What?
As Senator David Pocock said, the person sat on the beds to see if they were too hard or not.
Oh, my God, it's quite extraordinary.
In Senate estimates yesterday, Pocock accused the Future Fund chief executive, Raphael Arndt, of spending taxpayer money in a cavalier way. Now, the EA, the executive assistant, had taken the other trip to assist the Future Fund's board, whatever that means. Arndt said the trip resulted in savings higher than the cost. He said there's about $30,000 in savings in that. Though Pocock then asked whether it could have been done online or over the phone. Maybe we could have those savings that way. Arndt himself was in hot water as well. He attended the exclusive members-only Club 33 at Disneyland. See, the members-only Club 33, you're thinking, where is this going? And then you end up with at Disneyland. It takes a decidedly different turn. He said it was for business. He was unable to say if taxpayers or Disney picked up the bill for that trip. He said he went there to learn about Disney's training programs, which now that I think of it, we are going to have the Future Fund investors running around like Mickey Mouse.
Oh, God. How to stay in character at all times. Yep.
The Future Fund, of course, we all own that. It oversees a portfolio of about $261 billion. Anyway, the chief executive in the EA in hot water for travel expenses. I keep thinking of Mickey Mouse investing.
It's just not a good look, right? You know what?
Pub test.
Yesterday was a day for exorbitant flights and travel details, because we then have Communications Minister Annika Wells also under fire now after billing taxpayers $70,000 to host an event in New York that was spruiking Australia's teen social media ban, and for spending almost $100,000 on flights to attend the United Nations General Assembly.
Wells and a staff member flew to the September UN General Assembly meeting after delaying her departure following the Optus 000 outage that was linked to 3 deaths when calls to emergency services couldn't be connected. A senior public servant also flew to New York earlier than planned, but I mean, I kind of have sympathy for Wells on this one. She's sort of rocking a hard place. She was criticised for going, but she did stay. But that, where I really kind of run out of sympathy is the cost of the return commercial flight to New York for Wells cost $34,000. Her deputy chief of staff's cost was $38,000. The online assistant secretary who flew 2 days earlier, $22,000. $38,000 for a return business class airfare. I mean, I looked at yesterday, $14,000, $15,000, $16,000.
Yeah.
I mean, come on.
No. And I don't think anyone's questioning whether, say, a minister should be travelling business class or anything, but there are ways to actually do this in a more cost-effective, cost-efficient way, right?
Exactly.
Oh, big fiery start to the show with an economics lesson as well, which was less fiery but very educational. We'll be back in a moment with the rest of the day's business news. Sean, 2025 has proven to be a year of contradictions in the housing market, according to Domain, with the first interest rate cuts in 4 years being swamped by rising property prices in every capital city.
In its end-of-year wrap, which I don't like to even say because it means it's the end of the year, Domain said prices rose everywhere. On average, houses rose 9%, units 7%. Investors flooded back to the market, competing with first home buyers. Therefore, that bottom end of the market actually did pretty well. So-called affordable cities of Brisbane, Adelaide and Perth, well, they've lost their status as affordable. The Domain report also says that the rate cuts in February, May and August reignited buyer confidence, pushing clearance rates to multi-year highs, but that boosted price growth, overwhelming the benefits of the rate reductions.
Consumers are buying earlier ahead of Christmas this year, but the total number of shoppers will fall as cost of living pressures persist.
68% of Australian adults plan to buy gifts this year, which is actually down from a year ago, down 9%. Total gift spending is forecast to rise slightly to $12 billion. Shoppers spend on average $757. The biggest spenders are the 35 to 49-year-olds who expect to shell out an average of $853, according to the Australian Retailers Association. The six-week run into Christmas, which includes the just completed Black Friday, Cyber Monday sales, most important period every year for retailers. The Retailers Association says total spend, we're talking everything, groceries, alcohol, the whole shebang, forecast to come in for the 6 weeks at $72.4 billion this year. An interesting trend they pointed out, the ongoing shift towards bricks and mortar shopping as a proportion of total shopping. So it's not like people aren't online shopping, but as the pie grows, the proportion in the growth in bricks and mortar is growing faster.
Okay. Speaking of online shopping, today's Q&A, Sean, Carl Durrant, who is the Managing Director, Australia and New Zealand for Stripe, which is the global payments platform, comes into the studio and talking about Black Friday, Cyber Monday, the future of retail, and just some of these stats just about how much people were spending over the 4-day period and before that.
That's me.
Yeah, I'm not surprised.
I went out of control.
Oh, God. Well, you're going to love what he says about the future of spending where AI actually goes and does the shopping for you. Wow. And you no longer need to actually do any price comparisons, which is music to my ears. And it's only like 18 months away. So it's a ripper of a chat. It's coming up after the show. Local markets, how did we go yesterday?
Very quickly, slightly higher, 8595 points. Market fell in the run into the GDP figure, then it surged, then it came back. Gained big miners, BHP, Fortescue, Rio led the large caps.
The Australian superannuation system yesterday got a ringing endorsement from US President Donald Trump, who said it was a good scheme for working people and one that he is seriously considering.
The $4 trillion plus system has been garnering support in Washington for most of the year, really. Obviously, Trump has now heard about it. The president said the Australian superannuation system is liked by people in the US. It is considered a plan for working people, he said. He said it's a good plan. It worked out very well.
Perhaps he also likes it because there's a huge amount of money looking for a home and suddenly there's investment potentially going into...
Well, we did. There was a summit which Kevin Rudd hosted. I'm going to get this wrong, in about March. And basically what came out of it was a super fund saying we're going to invest $1 trillion in the US. Yep. It was over like a decade-long period or something like that.
Yeah.
That sort of thing is music to Donald Trump's ears.
Oh, absolutely. Turning to international news now. How about this? Michael and Susan Dell, the founders of the Dell Technologies empire, have pledged $6.25 billion to help fund so-called Trump accounts, which are being rolled out to American children.
It's very cool. You pointed this story out to me. The money will help support children benefiting from what's called Invest America, which is the official name of a new baby bond style program. So from next year, US Treasury will put $1,000 in an investment account for every child born in 2025 or later. The Dell's charitable foundation will deposit an extra $250 into 25 million additional accounts. Those donations will target lower income areas. Now, it's believed to be among the largest ever cash donation to charity. Good on them. Donald Trump described the accounts as the first real trust funds for every American child. It's a great concept, though, the idea that you put in $1,000. I mean, I know lots of people who do it privately, whose grandparents have put in money for kids and stuff like that.
Yep.
I just don't think it's a bad idea at all.
Yeah, and I like the fact that the Dells did it on Tuesday, Giving Tuesday, it's come up as part of the Black Friday Cyber Monday, and now there is Giving Tuesday, which has got them to focus on philanthropy as well, which is actually kind of cool.
Yeah, very cool.
Finally, Sean, the search for missing Malaysia Airlines Flight MH370 will resume on December 30, more than a decade after the Beijing-bound flight disappeared in really what is one of the world's greatest aviation mysteries.
The Boeing 777 was carrying 227 passengers and 12 crew when it vanished en route from Kuala Lumpur to Beijing in 2014. Multiple search operations for the plane have been conducted since then. All proved fruitless. The most recent search in the southern Indian Ocean was suspended in April after just a few weeks due to poor weather conditions. Now, exploration firm Ocean Infinity has confirmed it will recommence seabed operations for 55 days, conducted intermittently. Won't we all want, hope, wish, particularly for survivors and family, that they actually find out what happened?
Yeah, indeed. Okay, up next, Fear and Greed Q&A, as I mentioned before, with Stripe's Carl Durrance. It is coming up in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au, which is also where you sign up for that free daily newsletter that I keep banging on about. Thank you, Sean.
Thank you, Michael.
It's Thursday, the 4th of December, 2025. Make sure you're following the podcast and please join us online on LinkedIn, Instagram, X, TikTok and Facebook. I'm Michael Thompson and that was Fear and Greed. Have a great day.